I am very excited for the next discussion, not led by me, albeit led by a much cooler, suave guy than me. He's got better hair.
Just a couple years younger, that's all.
Man.
That's all I got on you.
All right. Well, Javier Hasse, welcome back, Managing Director of Benzinga Cannabis. After this discussion, ideally, we can do some more polls. I'm going to let you welcome on a good friend of Benzinga and somebody who I think works enough with the companies to drop some great insights here. So I'm going to back out. I'm going to let her come over. Enjoy it.
So as Steve was just saying in the prior session, this is a great time to invest in the cannabis industry. And today I am joined by someone helping other people do exactly that. Her name is Judy Rinkus. She's the founder and CEO of Seed to Sale Funding. Judy, how are you doing?
I'm doing well, Javi, and yeah, you may have the best hair, but Elliot, he definitely has the best eyebrows I think I've seen since Brooke Shields. If I'm, aging myself there. So yay.
A Brooke Shields. I love that. I'm gonna use it. I'm gonna use it next time I have to compliment him.
There you go.
So tell us a little bit about yourself, please. I mean, you,
sure,
Judy, of course, Seed to Sale Funding, and what you do.
So, I'm the founder of Seed to Sale Funding. I currently have 4 other team members. I started this firm almost a little over 2 years ago. Prior to that, I had been in commercial banking and commercial lending my entire career since college graduation, and we're not going to go into how long ago that was. And so the way I got drawn into it was I was doing commercial lending. And after I left banking per se, I was getting, contacted by my former very good borrowers, commercial real estate developers, business people who wanted to get into the industry. This was shortly after Michigan went with recreational. I'm located in Michigan, and they couldn't find anything. Yep, they were used to going, typically to a bank because that's what they were most used to. And so over the course of a few months, I was able to build up a network of around 20 different direct lenders, and also recruit 4 of my former banking buddies. And so we started this firm. Cool. And
was it hard? Was it hard to convince people working in banking to come work in cannabis, which to most people is just weed, right? Like it's
banking, regulated banking is, I don't even want to use the right term. It's a very difficult place to work and has been for about the last 10 years since the Great Recession. So no, it really wasn't that hard to do. There were just so many things we couldn't do. Our hands were tied, yet we knew they were good deals. And so there's some things that we'll probably hit upon with regard to my business model that makes this a very fun and interesting industry to be working in. So anyway, this started about 2 years ago. We've done almost $50 million of transactions since that time with just our small boutique team. So the way our business model is basically we are consultant, but we specialize in the placement of debt capital per se. Our capital I call them my lenders, some might call them investors. They are non-dilutive in nature. All they want to get out of a particular transaction is the payment of their interest, any fees, and eventually be repaid for their principal. So they're not taking any part of the business. They're not participating in the upside. They're leaving that to the actual sponsors, founders, and those investors. So we do this for it's a fee-based approach. And a couple of things I'll let it stay there. You wanted the history. That's kind of where we sit right now. So we've done around 50 million in transactions. We have right around $40 million in an active pipeline right now, which is defined by the clients have paid us a small retainer, and we've done the initial vetting, and we're in the process of getting enough information to be able to send it to one or more of our commercial lenders for review. So it's going to be another good year.
Indeed. Let's hope so.
Yeah, absolutely.
Now, there's several questions I have from your introduction. Probably I'd start with why go for debt financing versus equity financing, right? Some may argue, equity means you give someone else a piece of your business, but you are not the sole responsible for the potential downside, right? You're not on the hook for debt, right? But so what's the benefit of debt financing versus equity financing?
Well, I think in the long run, almost always debt financing is going to be more cost effective. It may not seem like it up front. There's certain things that have to be paid for. There are lender fees, OID, if you will. There's, the interest rates are certainly much higher than what a lot of commercial borrowers are used to. I figure without banks being in the commercial lending, banks take up about 50% of the U.S. banking space in general for all industries. So you take them out, you don't have a lot of competition, and of course that's what's part of what's driving up these returns and these rates. So at first you might think, why would I sign up for that? But if you put pen to paper and you figure out, if you believe in your business plan and you believe that you have a tremendous amount of upside, why would you share that with someone? Which is what you're doing when you're selling more equity. And and then the existing investors that you have in your business should appreciate a prudent amount of equity in the capital stack for the reason that that's going to increase their ROI. Yeah. And so that's really the thing that people have to wrap their arms around. People everyone's different. Everyone has a different goal for what they want their venture to come out to be. But certainly if you expect to be able to perhaps sell your a company or your whatever, in say 5 years time, whatever it might be, and you want to monetize that, having some debt capital in a prudent fashion really makes a lot of sense.
Oh yeah, no, definitely, and it's, as you were saying earlier, a non-dilutive way to finance your business. Now, a quick follow. Who is this for, right? Which kind of companies would benefit the most from debt financing versus equity financing?
Well, we are concentrating certainly plant touching businesses not only can probably benefit the most, but have the most options. Not that there's tons of options out there, but probably the most. Part of that is, and probably people more on the cultivation and manufacturing side, not to say that retail doesn't have an element, but those portions of the industry are pretty capital intensive, right? You have to invest in PP&E. What is a natural for a lender to take as collateral? PP&E, right? And most of the loans that I offer are senior secured facilities. So it follows that you would have the most luck getting financing for those asset-based projects and can get the most operating leverage out of and financial leverage out of if you're in those portions of the industry.
Now you are mentioning, you are connecting people looking for capital, mostly plant touching businesses, to suppliers of debt capital, right? And that means you are not, so seed to sale funding or Judy yourself are not direct lenders, right? So this in turn means you charge a fee, right? And I have to ask, why would I pay you, right? Why would I go to you instead of directly to the lender? Like if you're going to take a fee. And sure. I don't mean to be mean or facetious, right? It's a fair question.
That's our entire value proposition around here. I'm happy to talk about it. The primary reason is these are called private lenders for a reason. There's a reason they're private lenders. They like to stay private. Not all of them. Certainly, we have the category killers out there like the IIPR and everything. Now they're going to do more of a sale leaseback, which we also offer. But there are a few out there that are but they also concentrate in larger transactions. There are an awful lot of family offices, private funds out there who have raised a good amount of capital and are looking for places to put that capital. You will spend weeks on end searching for every last one of those and waste a lot of your time that you could be spending on much more profitable activities. Or you can call me, okay? And I can circumvent that because I know most of them. And in the midst of doing that, you're getting advice. We charge our fees are not based on which lender you choose to go with. So whatever advice we give you is completely agnostic. You're working with a team of commercial lenders with over 100 years of combined experience. I think I probably have the most of that experience, but in any case, and we speak lender. Okay, we know how to.
That's one of my favorite.
It's very different. It can be very different if you're talking to, say, an investment banker who specializes more in equity raises. They speak equity. They don't necessarily speak lender. Okay, they can be very different in terms of terminology and the focus under which a particular group of people would be willing to invest funds.
It's funny you mentioned that. It's very funny you mentioned that, because that's exactly what happens to me many times when covering the industry, right? I know I speak equity much more fluently, or venture capital much more fluently than debt, right? Or lender. So when you talk about senior, secured facilities, I'm going back like many times just to check what it means, right? Like these kinds of
I see them do the same thing with the equity side. So I guess thank God for Investopedia. That's all I have to say. But I make no representation of being an expert in equity or having those kind of contacts. We often work jointly with investment bankers, and I'm happy to take any of those kind of conversations that anybody out there would have. If you're doing a capital raise in general and you're trying to raise, say, 20 million of it, maybe it would be better off for everybody if you look for maybe half of that, if there are the assets to support it, in the proportion of a debt. That lowers the load that you have to go to in terms of the rest of your raise, and increases, I think, your standing in front of your clients very much so, because you're really going to be doing them a big favor. Yeah. And we work oftentimes with the equity providers. They get to do their equity speak, and I get to do my lender speak.
That's fantastic. One of the other things that really caught my eye in relation to this model, right? When I was asking why pay for your services, one of the main drivers of my bullish hypothesis behind your business, revolves around you being able to, or allowing companies to tap diverse pools of capital, right? So you can help them reach several lenders with just like one pitch, or the one, right? And I know pitching is hard. It's really hard, and it gets repetitive, and it gets boring, and it gets exhausting.
Unless like you, I love dealing with lenders. It's sick, but true.
So you take some of that off, the company's hands, right?
Correct. I mean, it saves. Think of the time that either you or your CFO would be spending, and think about it in terms of like sunk cost. Let's say you start out with one group that looks really promising, is saying some good things, thinks they can do a deal for you. Something happens and they're not able to perform. And there can be lots of reasons for that. There could be something that came up on your side. Certainly during COVID, not so much now, but it's happened in the past during the Great Recession. People maybe don't even have the funding. The lenders maybe don't. And then you have to start over with somebody else. In our case, we can pivot. We already have the core of the information that we need from you. We've done a write-up. We've done an analysis. We get a no from somebody, for whatever reason might be, we seamlessly move on to the next source. And whenever I bring in something, I usually have a lender A in mind, a lender B, and a lender C automatically. I know exactly what my backup plans are going to be for a particular client. Mm-hmm. Yeah, it just saves a tremendous amount of time.
Actually, one of the people in the audience, Myron Hubbard, is wondering if these funds are available nationwide or only for Michigan residents.
Oh, no, not at all. We are definitely nationwide. I wish we could say we could go into Canada internationally, but we're not able to yet. However, if you're listening in and you run a debt fund out of Canada or something, please contact me. We'd love to, because I do get a lot of inquiries along those lines. But yes, we can go anywhere where it's legal and licensed. Certainly most of what we've done has been in Michigan. I've lived in Michigan all my life. I went to college here. I mean, you know, I'm about 1 degree of separation away from pretty much everybody in the cannabis or the finance area in Michigan. But yes, we're actively moving into other states. Feel free to contact me. We're happy to talk to you about anywhere in the U.S.
Actually, that's a great segue. I was going to ask this at the very end, but where can people reach you? Where can they contact you?
So really the best thing is my website, which is seed2salefunding.com. It's right on your screen. Right there. Yeah. There's a contact button and there's a phone number. That phone number comes right to me. One of the benefits of being sort of this, boutique firm is everything's extremely personal. And so the inquiries all come through me, and then we go from there. But that's really the easiest way. My website will also give you a page on, we call it featured transactions, which has a number of our tombstones, if you will, on the deals. Most of them have actual names of clients, and if you know them, you're welcome to contact any of them for a reference. And I guess that I would also say that's another reason to do business with us too, is we have a proven track record. We know, we do know, based on prior deals that we've done, with high predictability, what our lenders will and will not do. And if we really feel that something is not a doable deal, we'll tell you immediately.
Yeah, indeed. And the proven track record, speaks for itself. Did you say more than 45, almost $50 million in
almost 50? Yep. Yep. Right. Just about 50. I'm just waiting for it to click over to 50, and I'm going to change my website and everything.
Yeah, that's exciting. It's like waiting for the K on Instagram or something.
Exactly.
We have 2 more minutes, and I'm curious about one of the verticals in your business, right? I know how sale leasebacks work. We have an amazing panel about sale leasebacks during our conference as well. But there's, purchase order financing and equipment leases. And how do they work? What are they?
2 minutes. Okay. So purchase order financing is really best used for a B2B business. So if you're a manufacturer, or you're an extraction company, or you're a grower, but not so much for the retail side of your business, but where you're selling it to another company, and there's a purchase order that's been generated that you've received, and you have there's a lag before you can ship those goods and be paid. You can discount those purchase orders under some circumstances and get the funds that you need to run the business in the interim before you're able to collect that cash. So it's a form of factoring. Okay. So that's the quickest and easiest way to talk about that one. Equipment financing is simply if you're buying equipment and you need to finance it. So by equipment, it's usually going to be more of, again, that manufacturing equipment. Most of the time, things that go into a cultivation facility are typically covered within a real estate transaction, such as lighting and that kind of thing. But if you're doing a bottling
anything that's not nailed to the ground, basically, right?
Right. You're doing a bottling line. You need extraction equipment. You need, in some situations, kitchen equipment. Things like that, where you have a hard cost, we can arrange for equipment loans or leases. So that's just it's just one of the other projects, and we can do multiple of these together. So we could do a real estate transaction. You can retain us as well for the equipment and for the working capital, depending on where you stand in your timing.
That's perfect. The full suite. Unfortunately, we're out of time. I have one very quick question from the audience, from Jim, who asks, it's a yes/no question. Do you partner with other lenders or syndicates?
We absolutely do that frequently. Yes. Happy to talk to you.
Perfect. seed2salefunding.com. Feel free to reach out to Judy. Not just feel free, do it. Judy, thank you so much for joining us. And
thank you so much.
You in our October event in Chicago. I'm sure you'll be there as well, right?
I hope so.
We'll make it happen. We'll make it happen, Judy.
Okay.
Also, I am in the process of changing my name to Brooke Shields. So in the last 20 minutes, I have started that process.
Oh no!
starting with my StreamYard name here.
You started something you cannot stop now.
The moment she said it, I couldn't stop it, Javi. Steering into that skid real hard. Judy, thank you so much. Really appreciate you joining.
Have a great day. Bye-bye.
Javier, thanks, man. Appreciate you.